Well, good afternoon, Maverick traders. December 15th, Joe with you here once again on a Tuesday. Let's do a market roundup. I'm going to talk about some fun stuff. You guys know the drill. But first of all, let's talk about our new launch for 2024.
Immerse yourself in the excitement of real-time trading with the Maverick Trading Collective. We believe that the best way to learn is by doing, which is why you'll have the unique opportunity to observe seasoned traders making live decisions in the markets. Through live trading sessions, you'll gain invaluable insights into their thought processes and strategies. We will make the trades Monday morning when the markets open and manage the trades every Friday before expiration, keeping a rolling portfolio of trades each week. Everything will be done in real time, with a real account, with real capital, with real-time tracking. The Trade Collective starts January 2nd, and we will send more information for you to join a 1-month trial. The Trade Collective is not just about learning, it's about experiencing trading as it happens in real time.
The Trade Collective. So, we are going to get this up and rolling. It's going to be a handful of traders that you guys are very comfortable with and have worked with in the past. These include coaches, seminar guys, and some of the staff. This is going to eventually be for active traders in the capital sharing program, but we do want to launch this for everybody to at least sit down, take a look, and see if you like it. If you do like it, we will start charging $99 a month for the service. This starts on the 2nd of January with an introductory class at 9 p.m. Eastern Time. We're going to talk about the trade set video, which is going to be sent out on Saturdays, the Monday live session in the morning to place the trades, and then the Friday live class every Friday at 2 p.m. Eastern Time, 2 hours before the market closes, for any sort of adjustments or closures of the trade set from previous weeks. It's going to be a lot of fun. All right, let's get into the market analysis for today's action. And guess what? Nothing's really changed. It is bullish and bleeding higher, and everybody's super happy that the 2023 is going to end, or they're excited for 2024 to start. I don't know which, but the markets are excited. Let's break into the daily news here. The bleed continues higher. I like the word bleed. It's kind of this ominous, oh gosh, you can't stop it no matter what you put on it. But there is a bleed, and it's to the upside, and it is definitely continuing. Anybody who's been bearish or tried to throw a couple of bearish darts out there, folks, I'm not going to lie, I actually thought I could do a counter trend trade here and there. It's not working. So we shouldn't expect much else but bullish movement without a major catalyst to the bear side. It's going to take a freight train to stop this fear of missing out, this window dressing, let's see if we can jump back into the darling stocks. And by the way, folks, I might as well say that. If you've seen any of the darling stocks, I've got a couple I pulled up like ARK, the Kathy Wood stock, Shopify, any of those. I mean, they've just gone gangbusters. What does that mean they're going to sustain or they're worth it when it comes to next year? Let's not even talk about next year. All I got to talk about is today going into the end of the year. So let's stay diligent to your bullish exposure and follow chart patterns. I have been scared out of a couple of bulls personally. I've seen a lot of people saying, oh, it's too high, it's too high, it's too high. And you've heard us talk plenty of times about that. If it's too high, chances are it'll go higher before it starts to retrace. So please identify the chart patterns. Don't worry about the anticipation or extension, because a lot of these are extended. Just wait for it to set a pivot and roll over and confirm the rollover before we decide that anything is quote-unquote done. The VIX finished around 12.5. It's something that you don't really follow too much because we don't talk about it lately, because it is absolutely just flatlined. I don't have a chart of it, but please go ahead and pull it up. How do we finish today? Flat, but no, actually just moving a little bit higher. 0.68, 0.59, 0.66. I mean, that's over 0.5%. And that is a nice little notch after notch after notch. The Russells, 1.94%, had a big bounce. This one is a very volatile area. The Russells have been super, super volatile over the last month or two, but a huge bounce. And you know, it's interesting. Today was just a general purchase across the board, as I saw gold up 1.5%. Or excuse me, oil up 1.5%, gold up also over 0.5%. So this was a very interesting day as everything was purchased. Oil had been pushed down quite a bit. In fact, last time I talked about it, folks, was last Tuesday, and it was at $68 a barrel, and now it's at $73 a barrel. So a lot of volatility, a lot of surging going back and forth in the commodities, things of that nature. And it really is just, what do we expect the year to end? What do we expect the year to start? And we're seeing a lot of that in the markets. So keep that in mind. Advanced decline line and above below the 50-day moving average is very, very green. seeing 78% advancers versus 18% decliners for today. So it wasn't just the majors that we saw moving. It was a lot of oil and gold also participated. Just a general buy about of everything. Above and below the 50-day moving average, this has been 75-25 for quite a while. We're starting to see this start to skew over to the other side of 81% above and 19% below. So this last little surge we've seen over the last couple of weeks has truly benefited everybody. Let's jump straight into the charts now, and you can see what I'm looking at when it comes to the SPY. This is a very difficult area to trade up here, and I'm going to draw a larger box because you can see how extended we are from this base. Let me draw another one here. So this is this nice little high tight base, and the time to really jump into this was right there, right when we broke out, saying, okay, there's our breakout, let's move higher. We see it extend, we get a little bit nervous, we see a candlestick pattern like we had up here, big move to the upside and then a couple of drops. Look at the volume associated with that box that I drew up top there. It's huge, but it didn't go anywhere. It didn't even pull back to the rising 20-day moving average. A little bit more euphoria when it comes to purchasing going on than expected. So I'm just going to stay on the bull side. And what I mean by that, I'm going to summarize with this, folks, is don't abandon anything just yet. Don't worry about taking your bulls off the table or thinking that I need to get into some bears. However, it wouldn't be a bad idea to slow our trading as we get closer to the end of the year if you don't have an idea of what you to expect the end of the year or the beginning of next. There's no harm or foul in that. Let's move over to the Qs, and you'll see the exact same thing. We've got that same basing box going on, a beautiful breakout to the upside. This only had a 1-day hesitation, and it's just parabolic. That's what we like to say here at Maverick. Let me see if I can't get this, but this move off of this area is an absolute parabolic move. We started off of a pretty solid bottom. This down in here, folks, was that PCE number, or the CPI, excuse me, the first CPI number that came out lower than anticipated, showing that inflation was actually curbing, not falling, curbing, slowing down. And the markets just ran with it. And we've gone nothing but straight up ever since. So I don't want to get in the way of this freight train. Folks, I'm not going to sit there and put a bunch of money and expect this to go up another 15%, 10%, none of that crap. It's just, I just don't want to fight the bull move and anticipate or expect a bearish trend. So there's my 2 cents on what I see in these markets. Let's move over to the heat map. The heat map showing everybody participated. There's a couple out here who didn't. You guys can see that NVIDIA just kind of settled out, but NVIDIA, UNH, these are outperformers that have been outperforming for quite a while. Here's Amazon. Just some of the things that didn't really participate in today's move. And that's because they haven't gone down. They're not falling apart. So I want you to understand that people will buy a stock to the point of where they're comfortable with it, and it'll settle where it's at. Doesn't mean that it's undervalued or overvalued. I mean, we can make an argument on both, but it means it's just not participating in the next move to the upside. So a lot of my traders will come to me and say, hey, Joe, well, I got into ABC stock and the markets went up, mine didn't. The answer is be patient with it, and it should move higher with the continuation of sentiment. It might not move as high as this one or that one, but if you find yourself in any sort of bullet position that's really not doing anything, to dump it or turn around and try to go bearish on it right here at this point, I believe is probably a mistake and a little bit more reactionary than it is done off of science, right? Or your technical indicators are following a rule. So where am I at? I'm where we were yesterday. I'm where we were last week. I'm a +1 here, +3 in the overall month. I have to be. I really wanted to bring that down to a +2, but just the way that these markets are continuing to move higher, for me to say +1 or +2 is just getting in the way of what the markets are doing. The +1 that I have for this week started on Monday. Understand, now that it's gone up today, maybe it will go up tomorrow. That +1 for me goes to 0 because I just like to hesitate a little bit as we extend. Hesitate. Notice I'm going to 0, not -1, -2, -3, and expecting a consolidation or expecting a pullback. I just want to be less aggressive in any sort of bullish exposure until the market kind of goes sideways here or consolidates or pulls back. But that's kind of where I'm at when it comes to exposure. Adding new bulls here, if you're scared of it, if you're worried about it, you don't have to do it. But please, please don't throw bears out there. It's an absolute just crapshoot. Speaking of which, I have no bears. Take a look at some of the bears that we've been posting over the last couple of weeks. I know I look at my bearish watch lists, and every single one of them from Tuesday has got 3 or 4 up days from last week to this week, at least, and they've gone above resistance levels. I mean, this was a pretty massive participation to the upside so far this week, and I don't think that's going to change. On the other side of that, here's some of the ones I was talking about. Roblox seems to be pretty good. That when it's up, it's basing right now. ARC is gangbusters. Shop is gangbusters, pushing into new highs. But a couple that I really liked is this BEKE. I've been showing this week to week to week, and it is definitely inside of range. NVIDIA is one that Rob brought up, which I do think's neat. I didn't show it today because I'm going to go to BEKE again and Monster as well. But NVIDIA is cool because it's pulling back. It's established a range at a really high base. And then, like I say, once again, I'm not going to show you any bears because all of my bears aren't looking so bearish. So let's start with our first bull. This is NRG, and this is utilities. I talked about this last week, and what I liked about it was the ascending triangle pattern that I talked about. Say, hey, see if we can't break above it. And it was pushing about around the area that it was going to break out of it. We talked about it, but guess what? It did it yesterday, and a little continuation here today. If you're worried about chasing, I'm fine with that. Do something like a bull credit spread. Why don't you just throw on a credit spread somewhere like the 49 down to the 47, 46. I don't know if it's got dollar strikes or not, but bull put spread there for you credit guys, or a diagonal, something maybe sideways to diagonal from here over the next couple of weeks, maybe the beginning of January, if you're confident. But I do like it. I just like the ascending triangle pattern on it. Let's go to my sideways, and here it is once again, 3rd or 4th time we've talked about this. And it is just sticking at that area, 16 to 14 and a half roughly. I opened it up to 1440. It's moving up a little bit. If it does climb up to this area in the next few days, that's fine. If you want to play something sideways between now, today's Tuesday, tomorrow's Wednesday, for next 2-3 days, that's fine. It's just been a nice little sideways play. If you're afraid to trade anything right now, that's fine. You don't have to. That's what I love about trading. It's not a make or break. The way that we trade here at Maverick, there's not a make or break. There's no word to exit for the end of the year and re-enter at the beginning of next. Although, if you choose to, we can. There's no harm or foul to it. So with only a few trading days left in the year, be mindful of desired exposure into year's end. Be mindful of that. Do you want to be bullish? Do you want to be sideways? Do you want to be bearish? Do you want to be out? Just be mindful of that. There's no reason to sell everything and start fresh January 1 if you're comfortable with your exposure moving into the end of the year. However, don't anticipate a bearish January. Continue to focus on sentiment and chart patterns. If you want to think that, oh gosh, January 2, January 3, whenever the market opens, we're going to fall apart, well then get out. Don't sit through that. Volume should decrease through the holiday season, which will look a lot more volatile. I anticipate after the Christmas, we get into the Christmas is Monday, and then we've got Tuesday, Wednesday, Thursday, Friday, back into another holiday Monday, which is the New Year. Those days, they refer to it as kind of the Christmas rally area, could really get exaggerated when it comes to volatility and movement, and a big surge to the upside, or maybe a quick sell-off and then turn right around. Don't confuse that, please, with volatility. It's just low volume. You should be out or comfortable carrying it over that week anyways. But as far as looking for new trades and trying to be positioned, understand you don't have to do that. It's okay to wind yourself down here as we get through the end of the year. Enjoy the holidays. There's a lot of people I have to talk to each year, including myself, to say, look, just put it aside. You did what you did. Enjoy the holidays. Take a break. Relax. You're not going to make your money in the next 3 days for the year. But you sure as heck could lose by making some impulsive mistakes. So, economic reports. We got an uptick in housing starts. I think that's that's a carryover from last month, but I have seen the new home sales have plateaued, or have stopped decreasing. And I do believe it's because we did see a small drop in the interest rates because of anticipation of the Fed slowing down. So interest rates are in the high 6s from mid 7s or low 7s. I don't know where that goes. Jobless claims, Philly Fed, durable goods orders, PCE, and new home sales this week. I don't really care about any of those, and I don't think they're going to have too impact on the markets unless It is that outside crazy catalyst that comes out of nowhere. But the way these markets are going, what we're seeing in these numbers, I don't see that really happening. As always, check your potential trades. If you're going to get into them, my advice to you folks, and I'll be talking to you later this week again on these updates, is just enjoy the holidays, wind yourself down. You got to think about this year's taxes. You got to make sure that you can close some things going into the beginning of next year. Plenty of other things to think about and enjoy than trying to overtrade over the next little bit. All right, guys, thanks for joining me, and we'll talk to you next time. Bye, folks.